when you see your actual money falling, it makes you learn and find out why it's falling, man.
That's sweet, actually. I mean, that actually really takes us into the next segues us really nicely into the next segment, which would be about differences between the kinds of investments one can do, So specifically, what comes to mind would be ETFs, index funds, and options. So, Mike, you being the de facto guru for us on this topic today, what can you educate us on those three topics, sir?
First off, that's a lot of pressure to call me the guru of this.
It's on. It's on, Mike.
I
So love,
see,
bro.
man. I
And
see.
zero pressure, man.
Difference between an ETF index fund and stock options. Um, um, so ETFs and index funds are sort of represent the same thing there. So I'll sort of I'll go back a bit, right? So mutual funds and ETFs are a pool of investors' money to invest into different vehicles based off of the company's strategy, trading strategy. The difference there would be how you can purchase a mutual fund and how it's priced versus how you can purchase the ETF and how it's priced. So mutual funds is not, from my understanding, it's not traded on the stock market. You have to actually go to the physical place to purchase the mutual fund, or you have to go to a brokerage account or a brokerage that sells that mutual fund. And those prices are set based off of what they call the net asset value, where ETF is traded very similar to a stock. So you can purchase on the stock market. It's priced throughout the day. The price fluctuates throughout the day. And again, it's similar to purchasing the stock market, where you can purchase that and kind of see your value going up and down. ETFs are also a collection of pool, right? Pool of money. And then that's where the index funds come into play, where a lot of people that reference an ETF, I believe they're also represent an index fund, right? So an index fund is an ETF. It can also be a mutual fund as well. But a lot of people associate those index funds with the ETFs, where you can purchase on the stock market. And the difference there is specific. It's specific that the trading strategy is sort of mimics or mirrors an index, a certain index. So, for instance, you have the S&P 500. You can't purchase the S&P 500. But you can purchase something called the VOO, which tracks the S&P 500, which is an index fund. All right, so those would be the main differences there. Um, of course, those index funds are very specific to those particular index, and again, it's traded on the stock market, and you can see those prices fluctuate up and down. Stock options are best way to describe a stock. So a stock option would be a contract. So essentially, a contract that gives you the right to purchase a set of stocks, or stocks at a certain value. So it usually comes with 100 per contract, but it gives you the right to purchase those shares once it reaches your strike price. A lot of people, from my understanding, right? So the way that I use stock options, it's really, I make money based off of the price differences of the stock contract. So I probably rarely will execute that contract, but I'll make money based off of the price differences or the value of the contract as it get closer to the strike price. So I hope that makes sense. I know it's a lot that we can probably get more into with those there, but um, stock options are definitely a great vehicle, that where you can kind of understand, like, the upside is almost unlimited, but you can kind of understand what you can lose, right? Your contract can go to zero value. You can lose the money that you initially invested in. Where again, but it fluctuates over time, especially once it gets into gets closer to that stock op or the strike price, and actually reaches that stock price where you're in the money at that point. So I'm sure there's more I could probably speak to on that end, but I would say those would be essentially the main differences between the those index funds, ETFs, and your stock options.
That's awesome, Mike. I appreciate that. We I think we need just a whole different episode on just those differences, and like the different strategies individuals can kind of dive into. But I think that kind of whets the palate of the viewer. Like definitely just do some research on some of this on some of these topics, and kind of see how do people actually make money in the stock market. Kevin, yourself, kind of putting you on the spot, man. Have you dived into any of those particular scenarios before, so like with option trading, as I said at the top of the call, which we were not live, but Mike is like, dude, I think this is a good play. Do you yourself have any investments in the stock market? And actually, you can be just like a viewer. Like are you learning from this? And what strategies are you picking up that that kind of pique your interest?
Yeah. So for me, I have a portfolio that includes, several like big name stocks, like Pfizer, for example. I do have. I
This man
have
is
like
risk adverse, is what he is.
yeah, exactly. So I mean, again, it just depends on who you are and how you want to do this.
Yeah, yeah.
I do have like some stocks with some Tesla stocks as well. Not much, just a little. So yeah, I mean, my strategy is I look at it from a long term perspective.
Yep.
I don't get in to speculate because I feel like, as Mike rightly put, I mean, trauma is real. If you get in and you're like, oh man, I've lost this money. I don't know what I'm gonna do. But you see, if you're in, I mean, I love what what's his name, Warren Buffett says about stocks. Like if you have a long term view and you stick in, you will definitely make money. America's growing. America's making money. The economy is gonna continue to grow. So
Yep.
really, the goal is, or the point is, understand what you're trying to get out of this, right?
Yep.
That's how I see it. And I should mention as well, I've had interest in other investments beyond stocks. The way I see stocks is the stocks are one of the options out there, but it's not the only thing. For example, I know you've talked about you having a trucking company. When you have a business, like say if somebody has a corner store, for example, in actual fact, your corner store could make you more than stocks
Right.
in reality. But it depends on, one, how much capital outlay you have. So circumstances will always vary, and they will always determine what you can do, right? For example, I can buy a slice of S&P 500. So I'm investing in the 500 best companies in the U.S. market. That is different from me operating a corner store, for example. So there's all this. I mean, but it's also good to have a mix, I
Definitely.
mean, and the jury's out. I mean, the people will tell you like, no, that's not the best way. But it really, I mean, it depends on your risk appetite and all these factors. It basically comes down to that.
I love it. I appreciate it. You guys are dropping gold, dropping gems. I absolutely love it. Hopefully people are picking it up. And Kevin, you touched on a little bit